American Eagle Outfitter is getting the meme stock treatment. It's up more than 15% for the week. High short interest and brand recognition made it a prime candidate to win attention from retail traders on Reddit and X. And then the company announced that actress Sydney Sweeney would be headlining a fall campaign for American Eagle's denim jeans. Traders jumping on that, and mentions along with it surged online and everywhere else. The stock price taking a real flyer. There's the ad with Ms. Sweeney joining us to talk about the resurgence in meme stocks, including names like Kohl's and Krispy Kreme's up more than 40% for the week. And some of the wild swings taking place in GoPro and outdoor. Steve Quirk, Robinhood's chief brokerage officer. Good morning to you. What do you make of this? What are we supposed to make of this? Every time I see this kind of thing, to be honest, I get anxious and concerned. Maybe I shouldn't be.
Yeah, I would call this probably meme stock 3.0. But if we remove the word meme, I think we've seen this behavior many times in, at least over the course of my career. I actually had an interesting conversation. I have 3 daughters yesterday about whether that move was more credited to Sydney Sweeney or to, the Reddit chatter, because my daughters also are investors and traders. And they were attributing it more to Sydney Sweeney. But I think, look, none of these names, all the names that we have up on the screen right now and that have really kind of exploded, none of these were in the top 100 most actively traded amongst our 26 million customers until last week or until, earlier the week. And they've made their way into the top 25. They aren't overtaking, the most popular names, which are the Teslas, the Metas, the Netflix, and Amazon and others. But they are moving up. And as, other ones come, they're sort of moving down and then getting replaced. I think the larger story is, in previous visits to speak with you guys about retail behavior, we talked about, during all the tariff conversations, we saw our customers really aggressively buying the market. And if you look at what's happened to the market since then, we're up close to 30%, which is pretty remarkable in a quite short period of time. So I think what you're seeing is, those names have appreciated so much. They're taking some of those gains and saying, all right, what else is interesting? What's volatile? What brings me a little comfort around this is we're not seeing crazy volumes in these, at least from a retail standpoint on Robinhood. And they're also very low dollar notional. So, people are taking small amounts and just, playing with these because they're interesting and they're what's being discussed.
Do you think we could have a run like a GameStop again?
I don't prognosticate, so I'm not sure what's going to happen. But the way that it appears to be happening is they sort of come into favor and then, get replaced in a timeline that doesn't really give them same ability to run in the way they have before.
Steve,
I also think sorry, go ahead.
No, you go ahead. Go ahead.
No, I was just going to say the one other thing that's been quite fascinating to me is, that some of these traders, and they're talking about it on Reddit and other places, they're just asking ChatGPT which one of these has the most short interest, which one of these has the most propensity to run. And so on a larger scale, a retail trader is always looking for an edge. And so when they find new tools and abilities to help them, do research or look for opportunities, they're now using what's now available and wasn't available in 2021 or other times. And I think that's kind of cool, actually, that they're, because they can take that to their larger portfolios and, have it help.
So, Steve, okay, here's the big philosophical question. It's the one I grapple with the most. Am I supposed to believe that the folks who are trading these stocks in this way are all super, super sophisticated, not necessarily accredited investors, but super sophisticated, understand what they're doing, understand the risks, they're trying to shoot for the moon, and they totally get it, and if they win, they win, if they lose, they lose? Or am I supposed to believe that there are some super sophisticated people who are effectively taking advantage of others who are not that super sophisticated, who are going to be holding the bag, and it is your job and my job and others to ring the alarm bell?
I don't know that I would say we need to ring the alarm bell, but to answer your question directly, I think it's a mix. That's who's in here. Look, if you lived through the meme stock era as a institutional investor, I can assure you that they're being pretty careful about, getting in front of one of these because they've had some bad experiences. So, they're probably looking at ways to capitalize on what retail is interested in, which is their job. As for the retail and who's trading it, I think you have the whole gamut of people. Some people who are brand new, some people who are very experienced that are trading it. The one positive that I would say from this is, and we kind of did this and talked about it with you guys on air, even the people who came in to Robinhood during the meme stock era, we looked to see how many of those people are still around Robinhood, and it's like 85%. And today those people have a retirement account and they're in yield products and they're doing things. So they make it's not how they make their way into the market. It's the fact that they make their way into the market and then they learn how to invest in other manners. We see a lot of people that actually enter the market through crypto today, and then they get introduced to equities and options and fixed income and other things, which is kind of an interesting path.